Quick introductions. So Stacey has a very interesting background. So Stacey is the creator of Her CEO, a website that instructs and inspires new aspiring entrepreneurs. Stacey shares her own website buying tips on that blog. She got her start buying websites on Flippa, and I do love this story, allowing her to gain financial independence and break free from her corporate job. I think you were stuck in a little cubicle or something and now have this fantastic view looking out over Chicago. So congratulations. Stacey has a unique perspective as someone who's transitioned from corporate life to website portfolio owner. Certainly looking forward to her thoughts. Big welcome to Ted. Ted is co-founder of Engage BDR, and in 2017 he took the company public, raising more than $50 million in the process. Prior to Engage BDR, Ted was with MySpace from its launch, developing strategic marketing initiatives. He worked very closely with Chris DeWolf and Tom Anderson. Tom was everyone's first friend, if I remember correctly, Ted. Ted was responsible for launching the brand in its infancy, but he's got more, also instrumental at lowermybills.com before the acquisition to Experian. And Ted is a regular contributor to AdAge, Forbes, Fast Company, AdExchange, VentureBeat, and many, many other top publications. Brian, sitting in the middle. Welcome, Brian. Brian is the CEO and owner of Human Proof Designs. His company has been helping entrepreneurs start and grow online businesses since 2013. Brian started his career in technology 20 years ago as a development engineer, spending lots of time in US-based firms, including Microsoft, Accenture, Berkshire Hathaway, and Exxon. He started his first consulting firm 12 years ago. Since then, has founded several online businesses, and he currently manages a remote team of 60+ professionals across multiple countries who are building and growing online businesses. Awesome panel. Ladies and gentlemen, we have mostly sellers in the room, and on the live stream, probably a combination of both buyers and sellers. Ted, first question for you. Just tell us a little bit about taking a company public and how that feels as an entrepreneur.
Well, does my mic work? Mic check. Okay. Sorry, this thing's a little unreliable. So it's one of those things. You wake up every morning, you look for a gun, you want to shoot yourself, but you don't find the gun. Now, taking a company public is very exciting. Living the life of a public company CEO and chairman is very rough. It's very different from my job. I'm a startup guy, as Blake mentioned. Was involved with lots of startups. I started my career in the mid-90s in Silicon Valley, in the beginning of the dot-com era, and then companies like Lower My Bills. I was at MySpace from its inception, and then I started this company, and I was a startup guy, and I'm no longer a startup guy now. So it's very difficult and very different.
Fantastic, thank you very much. Stacey, your journey's a little bit different to Ted's and equally as exciting. What was the first thing you bought, and did it work out for you?
Unfortunately, the first thing I bought, I ended up losing a lot of money on. It was a smaller purchase, so it wasn't detrimental. But as people in the earlier talks were saying, due diligence and revenue verification are incredibly important. And I was so excited to buy my first site and get out of my cubicle that I kind of skipped over that part a little bit. And the site ended up making 20 times less than the seller said it was making. So it really taught me it's very important to cross all your T's, dot all your I's, get every piece of income verification you can, get access to Google Analytics, get video screen shares, get screenshots. And so that's like something that's just like crucial if you're ever buying a site. So as a seller, you should really just provide all of that information up front and make sure it's in the listing, listed very specifically with monthly breakdowns, profit, revenue, expenses. And this will really help people be attracted to your site in the first place because they'll trust it more. And I don't even look at a site anymore if it doesn't have that clearly in the listing. So as a seller, that should be a focus.
Fantastic, thank you. Now, you three are all actively looking to acquire something. So Brian, let's start with you. What are you looking to acquire, and why? Why that particular asset?
Yeah, so no particular monetization method. It's really, like a lot of the speakers have said today, looking for opportunities where there's something that needs to be fixed or that can be improved. So if it's, maybe the site only has one monetization mode right now, and I look at it and it's got enough traffic to say be on Mediavine, and I could get another $1,000 a month with just a little bit of work to put it up on Mediavine. So, you know, 1,000, if it's 30x, I've just made $30,000 in the first month of owning that site. So I'm looking for those kind of opportunities, or maybe it's a site where they have some in-house content writers, and I know I could outsource that and save half the cost. So where can I save costs? Where are there revenue opportunities that are being missed? So those are things I really look for in a site. Obviously, some of the hot business models, like an affiliate site right now, a lot of folks are looking for more of a passive income as opposed to like an e-commerce site where there might be more work. So certain business models are more popular right now that we're looking to buy. But truly, like a lot of the speakers have said, it's just finding those that have things that need to be fixed. It's not a perfect business.
What are you looking to acquire, Ted?
I like to buy something that's not someone's nightmare, and I don't want it to make it my nightmare as well. So I don't want to inherit someone's problems. That's like the #1 issue, right? And I don't want to learn someone's business. I want to buy something scalable. And as Stacy mentioned, accountability in the stuff that's presented by the seller is key, and that kind of gives you a reflection of the business overall from day one. Helps you understand that if there are single points of failure, there are dependencies, and you remove these people, the business collapses, that kind of thing. So we're looking for things that are scalable, and part of that is buying things that don't have these bottlenecks potentially. If you remove them, then they'll collapse. So very specifically what we're buying is, so Engage BDR is one of the top tier digital advertising. Well, we used to be called an ad network, but now we're called an ad exchange, the programmatic ad exchange. Our business is monetization of publisher traffic. So what we're buying really is sites, websites, and apps that have traffic. Now, for websites, we'd like for them to have an ad business today. Apps, they don't necessarily need an ad business. As long as they have a lot of installs, we can create ad opportunities in them. And we have an SDK mediation platform that can monetize those apps pretty well. So from that standpoint, we're buying apps and websites with traffic, with ad businesses or without. And essentially, we want to see some history. We're not buying something that just exploded over the last couple of days. We want something that has at least a year's worth of history, stuff that we can look at, and more than one person involved. We don't want to buy anything that has just a mom and pop kind of look and feel. We want basically to be able to say, hey, if we buy this thing and this guy has a bad day tomorrow and leaves, it doesn't just make this thing collapse. We want it to continue to run. And as I mentioned earlier, I don't want to learn someone's business. If I buy something and these guys decide to leave and tomorrow they leave and I'm left with no business, I don't want to be in that situation. So I want to buy things that have been compartmentalized well enough that they can be scaled. And compartmentalized means you have a person in marketing potentially, you have a person that's operating the traffic or traffic acquisition or content, etc. That's compartmentalization. So we like organized businesses, and we're acquiring pretty aggressively.
Awesome insight. So we've essentially got an enterprise level buyer, and then we've got Stacy, who is essentially her own boss. So Stacy, what are you looking for? What do you want to acquire next, and why? And how does that fit into your portfolio strategy?
So a lot of the points that both Ted and Brian were mentioning, I also am kind of looking for, even if it's on a certain smaller scale. In addition, I am really looking for something that has a very strong brand and multiple sources of traffic. So not just based on organic traffic or just paid traffic or just social, but something where people are actively searching the site and going to the site directly, so it won't be as impacted if there's an algorithm change or if your site gets hit. That's something I'm starting to diversify and look into, because I realized currently a lot of my traffic is dependent on Google search. So if Google decided to blacklist me tomorrow, I'd kind of have to start looking for a new site or hopefully not a new job, but you have to be careful and make sure your traffic sources are diversified.
Fantastic, Brian. Yeah, go on. Please.
Just to add one thing there too is, you know, we look for sites that aren't using kind of black hat type of technology techniques. If we look at your backlink profile, and there's a lot of questionable links there, links that have nothing to do with the niche you're in, then the likelihood is we're not going to be interested in it. So if you're starting a business today, you know, do it the right way and you'll sell it. If we see a site that's well done, we can tell right away. We'll look at it. And the other thing is we're buying 5 to 10 sites a month at Human Proof Designs, and we just don't have time to ask you a million questions. So for most sellers, just give all the information up front. Don't make us dig for it. If there's a question about why does this look like this, where's this traffic coming from, have the answers and be forthcoming with it, because if you're working with a buyer who is interested and they have a portfolio of sites, in general, they're very busy. And if you want to sell your site, you need to have all the answers ready for them.
Just to add to that a little bit, I think that there's this holy grail unicorn that doesn't exist. It's called organic traffic. So in our world, it's like, it's kind of, you know, it's rare to see organic traffic, and a lot of the big sites that you see out there, it's all what we call content arbitrage. And we love it, you know, it's fine as long as you're buying it from the right places. So from our standpoint, that is what we call a scalable business, because you can determine your destiny tomorrow. Your only limitation is really capital, potentially. So if we can scale something, we have access to capital, so we can potentially grow a business pretty fast just based on what media we're buying, and potentially, you know, they're not spending as much as they could be or something like that. That's where we think a business can grow. You could take a business, and I was talking with Blake about this. The reason why I am here right now is because of an opportunity that came up. So I know the founder, one of the founders of Flippa. His name's Matt. He's been a friend of mine for a long time. One of my clients in Europe bought a site called Inquisitor on Flippa like 5-7 years ago, and they paid like 200 grand for that site. That site generates a couple $1 million a month right now in ad revenue, and that's a client of mine, and he's actually my birthday twin, born on the same day and same year. Anyhow, it's Guru Media. So I think it was really, really cool that he was able to understand the same kind of flow. How much traffic are you buying? What are you paying? Where are the channels? Being able to really demonstrate where your traffic comes from is key, because that's what buyers want to know. Buyers want to be able to see how much of it is scalable. Now, the Google search, all this other stuff that's out there, that's all third-party dependencies that you have you really don't have a lot of control over. So really, that's not something to brag about. In fact, we find that might be a weakness from our perspective, that, you know, hey, these guys got a lot of organic traffic. Something can happen tomorrow. There could be an algorithm change, or you can get slapped. You could have some really shady backlinks or something like that, and you're done. Your business is over. So really demonstrate how you know how to buy media, and your margins with relation to that too.
So let's talk about conduct for a minute, because most sellers are relatively inexperienced. It might be their first or second time selling a site, but most buyers like you guys are actually relatively experienced. As we pointed out in the Flippa Buyer Insights survey, most buyers own 3 or more sites already. So Brian, how do you think about conduct and how you actually conduct yourself, and how a seller should conduct themselves through the negotiation process?
Well, I always like to kind of start off with a personal relationship when we start kind of the due diligence, if we're really interested in that business, is just to get to know that owner and let them understand why we are interested in buying that business. It's kind of their baby, and they may have an emotional attachment to it. So developing a connection with the seller and having them understand that you're going to take care of it and what your plans are to grow it and what you're going to do with that site is important. But from there, some of the challenges, as other speakers have mentioned, is there's a lot of misconceptions about what your business is really worth. And I kind of liken it to like buying a house is, you know, if I buy a house today and then for some reason I need to move 6 months later, that business is earning exactly the same amount, that house should be worth exactly the same amount. I should be able to sell it for the same amount. And if I buy your business today and then 3 months later nothing's changed about it, I need to be able to get out of that and resell it for about what I paid for it. So I'm looking at what the market would pay for it. So if I have to sell it, you know, turn around and sell it, what am I going to be able to sell it for? I'm not going to, you know, give you 40x when the market says all the factors considered, people are paying about 30x for that. So you've got to be realistic about what the market's going to sell for. Just like you list your house, you know that eventually you're going to have to drop the price until somebody is willing to buy it at the market rate, right? The other things that I think are important is disclose everything up front. If there are issues with the business, that's okay. I haven't had any deal hardly that doesn't have some type of issue. But what happens is you don't disclose the issue, and then we'll find it in due diligence. And then we may have wrote you a letter of intent and said, we're going to buy that business for $500K. Well, and we love the business, or we wouldn't be giving you $500K. But then doing due diligence, we find some issues. That's an opportunity for me to now renegotiate. Now I have an opportunity to get it for less than $500K. And if you had disclosed that up front, that issue, I may have been, okay, that's, you know, it's understandable. I'm still giving you $500K. We would have signed a letter of intent for that. But once it goes into due diligence and I find those things, it gives me an opportunity to kind of push your price down a little bit. Because once you spent a month or two in due diligence with me, you're probably not going to walk away very easily. So disclose it all up front, and you'll avoid those problems later in due diligence that will probably be discovered. So that would be my advice, is price it right and it'll sell, and then make sure you disclose everything you can up front.
Just quickly, when Brian refers to 30x, he obviously means monthly, multiple, not annual. Stacey, very quickly, how do you think about conduct through the buyer-seller relationship?
Yeah, I agree with what Brian was saying on how the market really does set the pricing. So both the buyer and the seller really have to do their research so they can arrive and agree on the reasonable going rate, because you do have to be able to either sell it at the same price later or it's not really a fair deal. And something that I've kind of noticed that's important in the buyer-seller communication is for both people to respond within a certain time frame when they're talking. So you don't want to have a seller just kind of stop responding or leave for 2 weeks or something, because it shows they're not invested and maybe they're not even serious about selling the site to you.
Ted, is your expectation that a business that you acquire, the founders or business owners are sticking around for the business, or are you happy for them to walk away and you take it over from there?
I actually don't want to buy anything where someone leaves, because I'm not buying commodities. I'm buying businesses that require the people that built them to continue to run them until knowledge transfers happen. So we're not buying assets and, you know, leveraging them and doing stuff with them. We're just buying businesses. Or that's the difference between buying a product and a business, essentially. So we're buying businesses that are that require these people to continue to run them. So I think that's a pretty big differentiator, and we kind of set that tone from day one, saying, "Hey, look, we're actually not even buying your business. We're kind of merging, right? And so we're joining forces and we're merging to build something bigger together, because we're well capitalized and we have the access to capital that you need to grow the business, and you'd be sharing equity in our vehicle as well, and we're public companies, right? So from that standpoint, it does feel like more of like, hey, we're still part of the business, they're still staying on, and they are now a part of something bigger, rather than, you know, just being transactional. Because I think from the vision perspective, we really just want to be aligned with companies and sellers that have that share the same mindset, because we don't want to be sold a car.
Yeah. So are you guys structuring earnouts? How does that play out?
For earnouts, typically in most of the deals I'm working with, if they're more than 20K or so, we have some type of earnout that guarantees, the successful transfer. It may be knowledge transfer as well, or training that goes on for 30 or 60 days that we expect the owner to participate in. So there'd be some earnout in most deals.
Stacey, are you just taking them over, or are you expecting the owner to come along for the ride for at least a period of time?
Yeah, I've been the opposite of them, so I just kind of buy out the business and take it over.
Yep. Okay. So lots of different buyers, and buyer, the mandates are very different.
So what is it? Just one thing to add.
Yeah.
Just from a conduct standpoint with relation to, and kind of combining it with earnout, just be careful as a seller what you say from a projections perspective, because that's going to be what your earnout is based on.
Yeah, very, very good point.
I do it all the time.
So what is I imagine you're all fairly shrewd negotiators. You're not just going to take the price that someone throws up there. So what does a good deal look like? I know it's an open question.
Well, I think it just depends. Like, I'm not in the business to repair things and put them together and potentially, like, oh, this thing is completely not where it needs to be from a P&L standpoint, and and repair it and put it back in shape. We don't really have time, so we'll take something that maybe is marginally, losing money potentially, or let's say it needs to be optimized and some redundancies removed. Maybe they have some resources they don't need to pay for, that when they join forces with us, those expenses are gone, and all of a sudden it's profitable, and they have the capital to now buy more media and do that. So I think that from that standpoint, so we'd buy something like that. What was I forgot.
What does a good deal look like?
Yeah, a good deal. So I think that from our standpoint could be potentially a good deal if our synergies make sense. And add value to that business, that could be a good deal, potentially. Now, as far as a valuation, it's all kind of arbitrary, right? So it just depends on what it's worth to the buyer, essentially. Now, everyone's talking about these different numbers and these multiples and these things, but the bottom line from our standpoint is our valuation is based on a multiple of EBITDA, generally, right? And so even if it's not, it really is, because any real investor is going to value a business based on how it earns or how it's about to earn, right? And EBITDA, you just remove all your non-cash stuff, depreciation, amortization, interest expense, et cetera. And so we'll base it based on that, or where we think it'll be, or how close it'll be to being profitable or making some money. Because at the end of the day, you could have 10 million a month in revenue and you're losing money. It doesn't make sense from a buyer's perspective, not all the time.
Stacey, what does a good deal look like for you?
When either you see something in the site that the current owner doesn't see, where you can quickly increase profit or revenue or traffic, or you have a long-term plan where you have potential to increase it dramatically over time and earn it back in a shorter time frame than the multiple you paid, pretty much. So if you buy a site for 20 times monthly multiple, I would say a good deal is if you can earn it back in like 10 months. So that's kind of what I look for.
Brian, what's the most common mistake you see sellers make? If you wanted to give these guys some tips if they're going through the first time, what are the things that you see that they shouldn't be doing?
Probably the biggest one is financials. Lots of businesses that we encounter are not tracking their accounting very accurately, or maybe not at all. And that's the biggest hurdle, is trying to get an accurate picture of the financials. So my suggestion would be, if you don't have good financials, the likelihood is that we're going to get it at a discount, because you just can't give us good numbers, and you're going to have to sell it for less. So if you're in that boat right now, get your financials in shape and then list your business. Wait, have at least a year of good financials before you list, because then we have something to work with. That's probably the biggest issue we see right now with those trying to sell.
Yeah, make your lives easier, right? You use online accounting software. There's lots of providers out there. There's one here today.
Yeah, I think one big thing is stay away from bookkeepers. Like, this is not a dry cleaning operation, Like, I would say just get a real accounting firm involved. It's not that much more money, but it could be a big difference between you being profitable and not. And I'll give you an example. These are tech businesses. Tech businesses spend money in development, right? So all your development costs can be capitalized, and they just go on your balance sheet and removed from your P&L. guess what? All of a sudden you're profitable now because all the money you spent on building the site is now on the balance sheet, and it's removed from your expenses. And that could be the difference between you being profitable and not, and that's a huge difference from a valuation standpoint. Now, I shouldn't be telling you this because I would do this afterwards anyways. I'd restate your financials once I consolidate them. But that's a big win that I normally find.
Fantastic. I think there's probably some questions in the crowd.